Hello traders, this is the first weekly video. It's going to cover bigger picture. I'm going to start it with the DAX index daily charts, index to the left, futures to the right. Those are blank charts. On index we can observe this consolidation above a daily 20. On index we can observe potential bull flag formation, which is something that I was emphasized this entire week. And we can also observe controlled selling into Powell. And Powell's speech on the Jackson Hole Symposium was the most awaited thing and most important thing for this week, igniting at the end short covering. Now, Powell was dovish in his speak, and the odds for September's rate cut are increasing. Now, this is the news-driven move. I will talk more about this when we go to the US markets, but let's stick to DAX for now. So this, what was looking as a potential bull flag, was actually a well-formed wedge, as we can see if we go down to 30-minute chart. And by controlled selling, I mean this just marginal lower lows and no downside follow-through. No downside follow-through as a theme of this week, culminating with a wedge breakout, which started early in the session on Friday with the higher low. You see how they made lower lows than this one from the pre-market session from 8:40 a.m. 20 minutes before the open was first higher low. Now, speaking about Jackson Hole Symposium, we had this chart, Jackson Hole Symposium chart covering the last 5 years, in which we can observe that after Jackson Hole Symposium period, usually there is a dip, and that dip can be a swing low. It was swing low here, it was swing low here. Later, we got even lower lows, but at the end, new Jackson Hole Symposium, again, swing low, good upside period, swing low, good upside period, swing low, again, good upside period. So that's the speculation for the next period as well. Even though we got the up move, some of these here also got up moves at first, but then a dip. So this speculation is still on. However, we need to now observe other markets as well to see are they some intra-market divergences or not, and there are. Now on this chart I'm having few markets. This is DAX, all blank charts, we're just observing now. Here we can observe continued pressure on the upper end here on the all-time high. This is a Stocks 50 index also pressuring all-time high. And this here would be Stocks 600 futures, which almost tagged. This would be the all-time high from March. They almost tagged. They went just 1 point up to the all-time high. So this is also something to observe. And this would be S&P. Now, when we compare, for example, S&P, now all of these here are daily charts. And look, Friday candles. So S&P also had slow down move, controlled selling into Powell, because everybody can make that kind of Jackson Hole Symposium chart on S&P, on other instruments, and everybody can conclude that, hey, this is something that usually is producing a down move. And if that is the case, then why not to take some profit going into the Powell? So going into Jackson Hole Symposium, that down move, it's very logical. But again, it was controlled selling, and then this big candle on a Friday negated several down candles, and this is very important. But again, it is a news-driven move, which must hold. Remember that one of the rules or concepts about news-driven moves is news-driven move tend to retrace, which is something that we can observe on smaller time frames, for example, on DAX on Friday. Now, origin of this candle is very important, because new buyers need to hold above that. Going below the origin of this candle would obviously negate all of that optimism on Powell, and that would be then a bearish signal. Now here is the intraday or intra-market divergence with the US markets. This is S&P, this is Dow Jones. I told you before that Dow Jones with DAX was one of the most interesting markets, because they couldn't go above their highs here from December last year, and they did that on Powell. So again, a breakout on news-driven move, again something that needs to hold. This would be Russell, also with a big up candle. Let's go back to Dow, and now let's observe here S&P, and maybe like this, S&P, and then here Nasdaq. You see this divergence. Nasdaq didn't go that high as S&P, and actually the weakness here is in the tech sector. Now, all of that could change next week, because for the next week, there is not much of important data. First 3 days, there is Germany for business climate on Monday, then there is on Tuesday durable goods and other US data, nothing that can really move the market, and nothing on Wednesday of the scheduled data, but Nvidia earnings report is in the after hours on Wednesday, which can influence then trading on Thursday, obviously. And on Thursday, there is preliminary GDP, US one, and unemployment claims, which is something that is important. Going into Friday with German preliminary CPI and important data from the US core PCI price index. So Wednesday can be important to observe this divergence. Is it going to continue? Is Nasdaq is going to drag the S&P, or is it going to help it? And are they all going to then do the same which Dow Jones already did? So this is something to observe on the S&P, which can then drag all other markets. Is it going to break above the all-time high? Because breakout after such a candle from Friday should be a buyable thing. But again, where is the risk? The risk is that, hey, this was news-driven move. Going below the origin of this news-driven move would negate not only this buyers from Friday, but buyers also from the previous week. And that pattern after Jackson Hole Symposium, that there is usually a dip, then a rip. When we go higher on a weekly chart, on DAX, there is still no upside follow-through above the June high. When we observe S&P weekly, here is where things get interesting, because you know that sentence, that thing that I'm repeating all the time. What are those levels that everybody should watch? Like pre-market low, pre-market high, then up we go. Previous day low, previous day high, then previous week low and previous week high. So look at this candle. What is the low of this candle? It's the poke below the previous week low. It is a visible one. And on regaining previous week low, there was a rally. Now look at Nasdaq. What I circled here. This is the previous week with the new all-time high, but then the week before low was made at 22,974, let's say 974, to round that on 974, while this would be 960. This is 14 points. 14 points on Nasdaq is nothing. They just poked below. This is why it is necessary to be aware of the weekly levels. And this 14-point poke, as soon as they regained this level, which was 2 weeks before, ignited the rally, and also allowed a very good risk reward there, because you know exactly where your stop is, and you know exactly where your invalidation point is, and that would be literally like 10 or 20 points below this low. So with very small stop, you could get hundreds of points. This is a Dow. To observe Dow on a weekly chart, again, this is something that must hold, and this would be Russell. Now, speaking about Russell, it is always a good idea to know the patterns from the past. When we are speaking about scenarios, now everybody and their mother are watching these big green candles on Powell, thinking about obviously all-time highs, and obviously all of this is what? Short-term bullish, right? But we need to also understand what is the invalidation point and what can happen if those short-term bullish moves fail. And I think there is a very good example with Russell. I'm going to show it here. So that would be this here part, and 2021 all-time high, which was tested here in November 2024 with a good size down move. But I'm trying to show you this part here, which was a 11-month consolidation, this here, and then there was a breakout which then failed and market went much lower. So also this can happen, you know, when you're having this kind of patterns, which can be a rectangle or a ascending triangle, and market breaks from it, it must stay above the breakout point. And if they go down to test the breakout point, that test must be met with buying. And there was no buying here. And once there was no buy, they just dipped, and then they went all the way down to the opposite end of a balance, which is also balance rules. And this false break wasn't the school book one. They didn't went back immediately. They were trading for days above, and yet all of that at the end failed. So this is the example of failure. Failure of a breakout, and you need to know those kind of examples, because many people bought this and then they were stubborn on the way down, like, okay, they're going to reject at the end the move, but they didn't reject. They went all the way down to the opposite end of the balance, and at the end they broke much lower. So that's the bigger picture, and this is something for us to observe for the next week. I think the biggest thing would be to observe now DAX with S&P side by side, watching can S&P follow Dow Jones and break higher. Can it hold? Can it hold that news-driven move? Because that is something that must hold. We need to watch that breakout, and then can it drag DAX higher as well? So that would be it about the bigger picture, and the next video is going to cover recap for Friday and review of this week.